Okay, welcome to the Chapter 19, Section 3, where we'll be going over the statement of retained earnings, as well as the balance sheet as the last two financial statements for a merchandising corporation. Please make sure that you have the note sheet along with you so that you can copy down the notes as we go through the last section's material for Chapter 19, and then also have the demo problems handy so that you can attempt those as we go through the slides. And then when we get to class next time we meet, we will be going through the demo problems together. So let's go ahead and get started on the statement of retained earnings. The statement of retained earnings is going to be very similar to the statement of owner's equity, statement of changes in owner's equity that we did back when we did a sole proprietorship accounting records. Now, the statement of retained earnings, it is important to know that that reports the changes that take place in the retained earnings account during the course of a period. So in the beginning part right here of the statement of retained earnings, you'll see that the retained earnings as of the beginning of the year was a certain dollar amount. Then the net income was added into that, giving us the retained earnings for the end of the period. Now, the retained earnings account is a capital account, which means it's going to have, an owner's equity account with a credit side balance, just like the capital account. So the credit side of the account is going to increase and also be the balance side, and the retained earnings debit side is going to be the decrease side. All right, let's move on. Now, in demo problem 19.5, we actually are going to go ahead and put together a statement of retained earnings. So what you are given is the information needed in order to create this statement of retained earnings. You have the two accounts that are going to be represented in the statement of changes or the statement of retained earnings, which is going to be the capital stock and the retained earnings account balances. If you remember, the balances of those accounts are the same as the capital account in the sole proprietorship. We have a net income of $43,392, which is going to impact the ending balance of retained earnings, and all of those changes over the course of this accounting period are shown in this statement. So go ahead and give that a try. Otherwise, we will be doing it when we get to next time in class. Now, the balance sheet. If you remember, the balance sheet is the analysis of all of our assets, our liabilities, and our stockholders' equity. So we label the three sections. We have the asset section listing all of our assets and the total. Double rule, because now we are proving the accounting equation. Assets has to equal liabilities plus stockholders' equity. Then we go into the liabilities. We list all of our liabilities and total them up, and then label that as total liabilities. And then finally, the stockholders' equity, which is going to indicate the capital stock and the retained earnings, which is going to be the number coming from the statement of retained earnings, what we had just completed. And then the total stockholders' equity is going to be listed there. Total liabilities and stockholders' equity then with a double rule underneath that. If that equals the assets, we have proved that our accounting equation is equal. Therefore, the balance sheet also checks out. Now, in problem 19.6 demo problem, we will be putting together a balance sheet. All of the account balances are given to us here. We are just going to have to list them and label the balance sheet accordingly, and then double check the math to make sure that the accounting equation is equal. So making sure and determining that the assets equals the liabilities plus the stockholders' equity. So go ahead and try this one on your own. Otherwise, next time we meet in class, we'll be working on it together. Now, on the balance sheet, analyzing these amounts it's a very important process, and the reason is because the balance sheet is going to hold a lot of weight in terms of the health of the corporation and how well it is doing in terms of its assets and as it relates to the liabilities and the stockholder equity. So easier to analyze if you change dollar amounts to percentages. So instead of taking a look at dollars, because what are we comparing dollars to, percentages might be a little bit easier to interpret. So using horizontal analysis, which is comparing the same item on the financial statements for two or more accounting periods, the base year equaling the year used for comparison. So what you're going to find out in corporations' financial statements is you're going to find totals for each, usually within the last 3 accounting periods. And using horizontal analysis, anybody interpreting these statements can see the health and the trends of the financial data over the past 3 accounting periods. Working capital, which is going to be the current assets minus the current liabilities. That is going to give us the working capital. Now, this is also going to show extra money that is used to continue operations for expansion, for any other type of big ticket capital projects that might be on the horizon. The working capital might be an indication as to whether or not these projects can be taken on at this time or if they need to wait. So over the course of the accounting equation and the analysis of a merchandising corporation, not that much different from a sole proprietorship, just a little bit different in terms of how the data is analyzed and also which accounts are used to analyze the financial data. Now here's an example of analyzing the amount on a balance sheet. This is what you might see from a corporation. Notice how we have current year, previous year. So here's an analysis of the last couple of years rather than just looking at the current year. This way, an accountant or a CEO or any potential investor can interpret this data to see the health of the corporation. Is it doing well or is it seem to be hurting? In the course of this one, we can see that the assets have changed. They have decreased over the course of the year. Liabilities have also increased over the course of the year, and the amount of equity has decreased. This is the previous year to the current year was much better. And actually, I had these mixed up when I went through and kind of analyzed the data myself. I was looking at the current year as being the previous year and the previous year as being the current year. So this is actually showing a healthy organization, increasing its assets, decreasing its liabilities, and increasing its equity. All right, let's take a look at section 3 and just kind of summarize what we talked about, analyzing a balance sheet. In problem 19.4, we will be working on this together in class somewhat. Otherwise, it might be an independent practice problem, which you'll be working on your own. In the course of 19.4, you are going to use the comparative balance sheet on your mark in figure 19.7 to answer these questions. So take a look at that balance sheet and see if you can analyze the data correctly and answer those 6 questions. Go ahead and give that a try. Otherwise, this is a problem that we will be working on in class one of the next few days that we meet. All right, this concludes the Chapter 19, Section 3 presentation lecture. So please make sure that you review the slides as needed and make sure that you have all the notes so that you are prepared when we start going through these problems as guided practice and independent practice next time we meet. I will see you for the next presentation lecture when we start Chapter 20, and in the meantime, I will see you in class next time we meet.